Good evening. It is Thursday, March 1st, 9:10 p.m. People, I couldn't wait to get this video out. I tried last night to get a video out. It was just too late. And then this morning I came in here very early to get a video out before the markets had opened. And you had some early birds kind of stroll in, and they was making some noise. So I had to postpone it until now. And what a 2 days it's been. The Dow Jones Industrial Average has dumped 800 points these last 2 days. February closed out in the negative. It was the first monthly loss for stocks in 10 months. They were on a 10-month winning streak that went all the way back to like 1959. And February they finally closed negative, and March is starting out worse, okay? And I think the trend clearly is in place. Now, you know I'm out of stocks except for my gold stocks, and you know I'm calling that the top is in for stocks. And so far, that seems to be holding up, all right? It's going to be choppy, but I believe the trend is down, clearly. And I don't think it's just because the Fed is going to raise rates 4 times as opposed to 3 times. I think it's more than that. I think it's the fact that all this hype and hope, how everything is so wonderful, I think the reality of the situation is finally beginning to set in, okay? GDP growth, for example, can't get over 3%, can't sustain 3%. The second reading for fourth quarter GDP is now 2.5%. It was 2.6%. 2017 second and third quarter GDP barely cracked 3%. It could not sustain that in the fourth quarter. Housing is cracking. Mortgage rates are rising. The advantages of buying a home have been taken away. President Trump is now continuing the trade wars with steel and aluminum adding to the list. And I was looking back at the Great Depression, and we had the Tariff Act of like 1930, Smoot-Hawley, 2 Republicans, right, who started to impose these tariffs, and they ended up with all these tariffs. And many people believe that was the cause of the Depression, or at least escalated it. Of course, you have the naysayers like Paul Krugman, okay? Be that as may. But we're walking down the same road again. And I really think this is it, people. I think they've kicked the can down the road long enough, and they're rapidly running out of road. And, you know, timing is everything. Janet Yellen, she did her victory lap. She got out just at the right time. As she was leaving, she said, oh yeah, stocks are high, they're elevated. Just as she was walking out the door, and now Powell has to clean up this mess. And what a mess it's going to be. Now, gold so far has been under pressure. And I said the other day, I think it was yesterday, the day before, that they might use this as an excuse to take gold down below 1,300. And boy, did they come close. They brought it down to 1302 today, but gold had an excellent rebound today. They brought it down to 1302. It went all the way up to 1322. And when I last looked, it was about 1316. It's actually up about 80 cents right now. So, this article from yesterday, just a blurb. Gold prices remain on defensive following 2.5 Q4 GDP. Gold prices remain on the defensive as the U.S. economy grew in line with expectations. Yeah, they might be in line with expectations, but the expectations are very low. In the final 3 months of the year, according to the latest data from the Commerce Department, the second reading of fourth quarter gross domestic product showed that the U.S. economy grew by 2.5%, down slightly from the initial estimate of 2.6%. I don't think this is the reason gold is under pressure. I think gold is obviously being suppressed, okay? And there's also these people that they still believe that higher interest rates are negative for gold, okay? And that's just not the case. Not to mention the fact that these last few days, the interest rates, although they did spike, okay, they're not back up to that 2.94, 2.95 level. The 10-year today has come down to 2.82. The 30-year, 3.09, okay? I believe they are going to be going up, all right? The dollar really isn't doing much, 90.32, all right? It's hitting its head up against some resistance. The euro US dollar 1.22 again hasn't been doing much lately. The US dollar yen 106. All right, so when I don't see these big moves in these currencies right now, all right, so I think these stocks are starting to wake up to the fact that GDP, okay, is not what they want to get. Okay, the Atlanta Fed, okay, 5.4, 3.6, they're down to what? 2.6 now, 2.5 also for the first quarter. So it's not looking good. Then we have President Trump. He is continuing these trade wars, right? These tariffs. He just announced he's going to put a 25% increase on steel and a 10% increase on aluminum. And I was looking back, I started to read about the Great Depression of 1930, okay, when they had the 1930 Tariff Act. These two Republicans, Smoot and Hawley, okay, they instituted these tariffs. And before you know it, you had hundreds of tariffs. And many people say that led to, or at least exasperated, the Great Depression, okay? And I think that's where we're going right now. So the Dow down 420 points today, 1.68%. The S&P down 36, 1.33%. The Nasdaq down 92, 1.27%. The Russell down, but not by much, 0.33%. So I want to read what I saw just a little while ago, and we talked about this once before. February U.S. Mint coin sales weak. Dishoarding premiums behind decline. Now you remember I called up my gold dealer a few weeks ago. I like to call and check in now and then because I like to get boots on the ground and see what's really going on. And basically he told me he's never seen anything like this in years, okay? Just nobody's willing to buy. The premiums are very, very low. Inventory is building up. And some of the lesser dealers are just basically in survival mode. And this article kind of confirms that. There's a continuation of a trend that has been in place for more than a year now, with many North American investors opting to sell their backdated coins instead, observers said. This in turn has meant that dealers who buy these coins can then resell them at a premium far below those of 2018 dated coins. Bottom line, the market is soft, although not as soft as the mint data may suggest, since some buying and selling of backdated coins continues. Data on the U.S. Mint website show only 5,500 ounces of American Gold Eagle coins were sold in February. That's very low. This is down sharply from 58,500 in January and from 27,500 in February 2016. So this gold and so this asset class is the most hated asset class, okay, in the world. Nobody wants it. And they're going to rue the day, I believe, when they decided to dump their gold. It's been a trend since the beginning of 2017. said Peter Hugg, Global Trading Director of Kitco Metals. There has been a massive amount of distorting metal in the North American market. Commerce Bank analysts pointed out that the U.S. mint sales last month were the lowest February figure in 11 years. Thus, there is no sign as yet of any recovery following the very weak previous year, they said in a Thursday research note. Mint sales of American Eagle silver coins were likewise soft last month. So I'm not going to read the entire article, but I believe investors are discouraged. They're giving up. I said if they can't shake you out, they're going to wear you out. But I'm holding firm. I made it clear they're going to have to rip my gold out of my dead cold fingers. That doesn't mean I won't ever sell, but this certainly is not the time. All right. I believe there could be some pressure up until this March meeting. But like I said in December, bring it on. Bring it on. Okay, I can't wait to get this March meeting behind us, because that's when I think gold is going to go to that next leg higher and finally take out that elusive and difficult 1340 level. So it's a war, people. There's no doubt about it. It's a war. All right. I mean, this narrative that higher interest rates is somehow negative for gold is just not true. All right. Inflation is somehow bad for gold. This is absurd. And ultimately, okay, it's going to reverse. So I think, I don't know where you're at. I don't know what your position is, if you even have a position in gold. I don't know where you are in stocks, okay? But right now, I'm all in with gold. I'm going to stay the course, okay? And it's just, you just got to be right and sit tight, as Jesse Livermore said. So I'm not too concerned about these daily fluctuations right now. I like that it held 1300. I like the bounce that it had today. And if stocks continue to go down, gold's going to catch a bid. And if stocks continue to go down and the Fed has to reverse course, gold's going to catch a bid. So they can't suppress it forever. Ultimately, the free market will exert itself. And I used to tell people it's better to be a year early than a day late. And I don't think it's going to take a year, but I'd rather be a year early than a day late, because when everybody starts going to this door, and it's a small door, all right, a lot of people aren't going to be able to get in. That's how I feel. So just got to watch it, got to stay the course, and you got to remember we're in a battle. One listener, he pointed out, I don't even know, because to be honest, I don't even look really, but he said he congratulated me on having 150 subscribers, more soldiers. I have to laugh. That's what it is, people. This is more soldiers added to the war. Look, the front is getting longer. So stay the course, and thanks for listening, and Lord willing, we pick it up tomorrow. Ciao.